It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, everybody, this is the Tax Lady, and this is tax season, and we only got a month to go, and we want to help you. So if you have any tax questions, we want to help you. We're from EG Tax. We have 30 offices locally to help you, and we're open 9 to 5 on Saturdays, 9 to 9, Monday through Friday. And if you're getting love letters, if you're getting notices from the IRS, if you haven't filed, if you owe money, if you're pulling your hair out, this is the place to get free help. I'm Esther Gulius from EG Tax. This is Christopher Fabian from EG Tax, too. Came out of the office today.
Hello,
Felt good.
Esther.
Hello, Christopher. Hey, you got any good stories to tell?
None that I can say on the air. No.
Okay, well, I'll tell you. This morning I had a client that his wife's been filing married separate for years, and he's just had a mental block about filing. He was sure he was going to owe all this money. And he says, and they're not bothering me. So he came in this morning. We did 8 years returns. And you want to know why they weren't bothering him?
He had a refund
He had
coming.
refunds coming almost every year, and he says, boy, now I really feel stupid.
Yeah. Well, that's
You know.
the thing. You know, if they don't bother you, that's because they know they owe you money.
That's right. And after 3 years, it all went bye-bye, you
Yep.
know. And actually, the 2 years he did owe money, it was very interesting, you know, very little, maybe $300, was 2011 and 2012. So what we're going to do is we're going to amend his tax return with his wife for 2011, because I just want to make sure I get all this stuff put to bed first. I'm going to do 2011, get him some money back, and then after I get this all cleared up, I'm going to amend 2012 and put them together married joint, because they had children and they lost the child care credit, the daycare credit every year.
Yep.
So, you know, so that's my story, and I'm sticking to it. So if you have a story, you can give us a call here in studio, 803-0930, 803-0930, star 930 on a cell phone. The bottom line is we have 20 years of programs on our computers. We can do any state return, any federal return, all the way back to nigh on yonder. I mean, we can do it, and don't sit around. You know, it was interesting when I kind of got almost done with him today. He says, I have to tell you, every time I saw an EG Tax office, I felt guilty. But it was wonderful to get him excited. He feels like a new man.
You're not alone. If there's people out there listening, same situation, you're not alone. The problem's not going to go away. You got to come in, at least get it done, because if you owe money, you at least know how much. It may
That's
not be
right.
as bad as it is.
That's right. Well, this guy was thrilled. He doesn't owe anything at all.
You know,
and what he does owe, the little bit, we're going to amend, and he'll file a joint return,
Right.
and he'll get the rest of the money back. But we wanted to talk about getting ready, because really, let's face it, it is only it's less than a month now until D-Day, right? And so the first thing to do to get ready is you got to get in the game. And so it's like any of you in a sports analogy, you have to decide you're going to play. And so, you know, if you're in a pickle, EG Tax wants to help you.
Right. And the thing is, too, you know, I'm going to file an extension, you know, because I'm not going to be ready by the time April 15th rolls around. That doesn't delay your money owed.
That's right.
So you still got to get your ducks in a row the best you can to figure out how much you're going to owe, if you owe, so you can get that paid by April 15th.
That's right. So, all right, we got all kinds of people that have called in. When you hear somebody hang up, it's your cue to call in, 803-0930, star 930 on a cell phone. If you're in Florida, Arizona, out of the area, Toronto, and you're a U.S. citizen and you have income or assets in a foreign country over $10,000, you got to get your F-bar done. EG Tax will help you with that. The penalty, by the way, is $10,000. A lot of money. All they want to know, it's really just an informational form. You really want to get those things filed. So our phone number is, our toll-free number is 1-800-616-0930. And we're going to go to the phones and talk to Karen. Hey, Karen, how you doing?
I'm doing good, Esther. How are you today?
Good. What can we help you with?
Good. Okay. In the past year, getting back to the married filing separately, my husband and I are separated. We are legally married still.
Mm-hmm.
We have no dependents. Our children are grown. Last year we did file together.
Mm-hmm.
Now this year my question is, because of the proceedings they're still in the midst, can I file separately? Do I need to file married filing, separately?
Okay, if you're still legally
separately?
married, you did not get a legal separation. You're just in the process of a divorce, correct?
Yes, correct.
You have the option of married filing separate or married filing a joint return. You can do either. You don't have children at home with you, right?
No, they're both adults. They're both on their own.
Okay,
there's
so
no
you
dependents, and there's no deductions. We did own his business at one time and had, a lot of deductions going on, but that has changed. I work part-time, and I was just wondering what.
All right, so
what?
Tell me about his situation. Is he working?
Yes, he is working. He has dissolved his business. He's doing something else, kind of like a handyman all-around type thing, but he does still work for himself. And I work for a company, so that was my question. I didn't know which would be better.
Are you two friendly?
Yes, we are. Yes, it's very amicable.
Well, what I would do is I would do the return both ways and see which way works best for the two of you. Because until you put all the income together and how much he's paid in estimates and what his actual net profit is and what your net profit is, you really won't know. So depending upon if you have an amicable situation, wouldn't you agree, Chris?
Definitely, and that's what I tell people all the time. If you're good with each other, come in together. Do it. Let's see joint. We'll do it separate, and we'll see what's best.
Right. I mean, the other day, for instance, we had a couple that have a very estranged relationship, and what we did was we did the wife's return, and then we finished his return, and we did it both ways, and they saved substantially more filing jointly than they would have married separate. And so he signed, she signed, and we split the refund into two different bank accounts, so it's all fair, and then it's a win-win. The unfortunate thing is it's not like, because once you cannot go from you can go from married separate to married joint, but you can't go from married joint to married separate after April the 15th. So you want to make sure that you don't leave money on the table at the IRS. And by the way, I was just reading that I think there's 1 million tax returns that are still outstanding, with over $1 billion in refunds for people that they're going to lose those refunds by 2011 without filing. So I do it both ways if I were you, Karen.
Okay. I appreciate that. That's the way I was going to lean towards, but I just wanted to make sure.
All right. Thank you very much.
Thank you very much.
Bye-bye. That's absolutely true. You can't, because it's all numbers, and sometimes, and it's so interesting. Some income gets taxed like this, and so I had a boy that was going to flip a house. He says he's buying a house to flip. He came in this morning, so I showed him. Now watch this. This is a Schedule D. Now this is how it'll look next year. You say your refunds, your income's going to be about $18,000 from the gain of the house. If it's short term, you owe $1,800 extra. If it's long term, you only owe $400 extra. So you save that much money by holding on to it for a year. And those are little angles that you want to make sure that you understand, because it's all money, and you can't call them up and say, "Oh, gee whiz, I wish you'd send me my money back." Yeah, right. I'm Esther Gilius, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. We're going to take a short break. We'll be back with Carl, Nick, and Emio right after the break. I know that one. That's the Phantom
of the IRS.
That was a request
that
you very rarely make.
Yeah, and actually the Phantom's playing in downtown Buffalo right now.
Yes, indeed.
Half of the office went last night.
I don't know. I was working.
Yeah, I know, but I love the Phantom. I just think that's one of the most phenomenal musicals that ever were, plays, whatever. Okay, I'm Esther Gilius, the tax lady from EG Tax. We want to help you. 8030930, 8030930, star 930 on your cell phone. We're watching in the studio here. Fox News is playing, and it says that the IRS is reissuing 80,000 corrected tax forms next week. I think it's the 1095As that are messed up. it is really difficult. One of our clients that shouldn't have had to pay a penalty, we did all the exception, and the Internal Revenue just couldn't get it to go.
Couldn't accept it.
Couldn't accept
so it
it.
had to go paper.
Right. Okay, we're going to go to the phone and talk to Carl. Hey, Carl, how you doing?
Very well. Yourself?
Marvelous. What can we help you with?
Well, it's around Form 8880.
Yeah.
I retired from a company in 2007 and have been receiving retirement distributions since then. At the same time, I've gone back to work with another company and been able to put some money away in a qualified retirement savings account with them. So we were going to use 8880.
Okay.
And doing it through one of your branches. We put all the information in, it went in, and they left my retirement information out of Box 4, which says any certain distributions received after a certain date.
Box 4?
Yeah.
Box 4, you mean on the 1099?
No, on the 8880.
Oh, okay, all right.
Filling it out, trying to see if I can get the qualified
Okay,
credit.
well, if it comes through automatically on our program.
Yeah.
It's
And
automatic.
Yes, I've talked to two other qualified tax services.
Well, how much? First of all, how much is your income? Your AGI.
My income is under the 60,000.
Okay.
Okay, so I
All right,
qualify
have you?
for
But
that.
you've been taking money out of a pension plan.
Yes. But
If you take money out of a pension plan, then it negates the contribution.
Right, but are they? Is it any different if it's different companies?
No,
Different plans?
no. If you took
Doesn't
money out of a
make any
pension
difference.
plan, it negates the ability to do the 8880.
Okay, and why I say one of your branches did my form and said I qualified and was giving me a credit when someone else told me I didn't get the credit.
It
because
all
of what
depends
you're
on
saying.
who.
It depends on your code
Right.
of your prior distributions, whether a 1, 2, 7, or 3.
Seven.
It's
And
an
then-
ordinary.
yeah,
It's a regular.
and then-
All right, and it all depends on who put the money in the qualified other plan. But basically, if you have a large distribution, this is just general. If you have a large distribution from a pension plan, it in most cases will negate the 8880 unless it's the spouse that had the contribution to the pension plan.
No, it's all me.
Well, you know what, Carl? You know what? Call me at the office. I'll be there in about 45 minutes, and we'll pull up your return and look at it.
Okay.
Is that good?
Appreciate it.
All right,
And then
thanks,
we'll
Carl.
see.
Then I can explain it, because without seeing all the numbers, I wouldn't know.
Yeah, I got you.
All right,
I
thank
kinda
you,
figured
Carl.
it was going to be fun.
All right, no problem.
Thank
Thank
you.
you.
Bye-bye.
Bye-bye. Yeah, and that's the whole thing is you just
You
don't
gotta
know.
see the whole thing.
And it all flows automatically, so we'll see. Let's see, we're going to go to Emilio. Hey, Emilio, this is Esther. How are you? How can we help you?
Good. Thank you for taking my call.
Good. What can I help you with?
We have a limited partnership,
Okay.
and it's under our IRA, and we're already drawing from it. Do we have to file a K form under that, or?
Your IRA is invested in a limited partnership.
Yes, we have a holding in it, yes.
Okay, then the IRA will send you a 1099-R at the end of the year for the money you took out of it. The K1 is only for the investment side for the IRA itself, not for your personal return.
But that doesn't have to be filed, it just has to be submitted, right?
Well,
we
see,
get
if you took money out of your pension plan, then the administrator of the pension plan is going to give you, the recipient of your IRA, a 1099 form if you withdrew. If not, then if you took nothing out, then they're not going to submit anything except for your basis information so that you know how much is in your IRA.
We don't have to put it under the form that we get under the IRA then, right?
Not unless you took a distribution. Did you take a distribution?
Yes.
Did you get a 1099-R?
Yes.
That's what you use.
Okay, well, thank you.
You're welcome. And by the way, Emilio, are you over the age of 59 and a half?
Oh, yes.
The first $20,000 of pension you receive, or IRA you receive on a non-public pension, is tax-free on the state of New York.
The first
$20,000 you receive in a non-public pension or IRA is tax-free on the state of New York.
Okay, well, thank you very
You're
much.
very welcome. Bye-bye.
Bye.
Okay, and as a matter of fact, I had a lovely gentleman that's a listener to our show, and he came in the other day, and I was fixing his federal that he had done incorrectly, and then I looked at his New York State return, and he was paying taxes, and he was over 59, and I said, haven't you been subtracting your pension? No, so then I got him back. Anyway, I got him back like $1,000, so that was a good thing.
Yep, 803-0930, 803-0930. Call us with your questions so we can help you.
Right, and then we're going to go to Nick. Hey, Nick, how you doing?
Good. How's it going?
Good. What's happening?
Well, I have a question. I have an employee who's receiving health insurance through the exchange,
Okay.
and I wanted to subsidize that somehow. So I was told that I should pay money to the exchange directly along with the employee. We send our checks in the mail together. Is that right?
This isn't a plan through your business. It's a plan that they did themselves.
Right.
Right?
So here's the thing. If you want to be able to deduct it, right?
Well, I guess I could get a tax credit, yeah.
No, you can't get a tax credit for his Obamacare.
Okay, so deduct it somehow. Okay.
Well, what you want to do, it seems to me, Nick, is that you want to give him a raise so that he has extra money to pay for his Obamacare. Then you are able to take it as an expense on your payroll, and then he has the extra income to pay for his health insurance.
But are there pitfalls to grossing up people's pay for the purpose of Obamacare?
Well, for them, yes, because depending on the subsidy, it would decrease
their subsidy, right? So,
but does that make any sense? Me sending checks
no,
in to pay the premium?
No, because it's not your plan, and it has to be a qualified plan in order for you to make it to take it as tax deductible for him. If you give him money and it isn't through a qualified plan, it's still taxable to him.
You may want to look at the SHOP, which is which is the Obamacare for small businesses, and get the health care plan yourself through that for him,
right?
And then you can contribute
directly, and it's a qualified plan. Now, I'll tell you what, Nick, we have a navigator that works at our Lockport office, and his name is Tim Eliason, and you know the
438-2137.
And he won't charge you to talk to him, and he'll help you to find out about the SHOP, which is health. It's health insurance for employers to help fund for employees through Obamacare.
438-2137.
Tim Eliason. Okay?
Thank you.
All right, thanks, Nick. That's the tricky part. Anytime an employer gives an employee extra money, then that's taxable to the employee. So you can't just be doing this helter-skelter. You got to know
It's nice that he wants to help
That's
him.
exactly right. But you have to do it properly. And it usually means you got to jump through some hoops, but there is a way to do it.
Yep.
Right? I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we're going to go to Marge in Cheektowaga. Hey, Marge. Hey, Marge.
Yeah.
Wow, Marge, you sound like you're on the other end of the world.
Sorry. I had you on the speaker.
You're cooking dinner.
Yeah, what you doing, Marge? What you cooking for dinner?
Cooking. Believe me, far from it.
What can we help you with?
You mentioned last week something about my house is paid for.
Okay.
I'm single. Do I have to be on the phone that people can hear me?
No, we can hear you. Everybody can hear you.
Oh, I don't want other people.
You're on the radio, Marge. Didn't you know that?
No, I turned it down.
Well, but just because you turned it down didn't mean we can't hear you. But anyway, just ask your question.
All right. You mentioned something, because I lost a lot of money on the stock market. All right. That was 4 years ago.
Mm-hmm.
To regroup, it's not been easy.
Okay.
You mentioned last week
Maybe a reverse mortgage? Do you need money?
Yes.
Okay, a reverse mortgage. Okay, so you don't owe, you need extra money to live on, right, Marge?
Yes.
Okay, so you might be a candidate for a reverse mortgage. You're over age 62, right?
Over 60.
And the house is paid for?
Yes, it is.
All right, so a reverse mortgage is one where the bank basically comes out and appraises your house, and the equity in the house, they start paying you each month, and it's tax-free.
Oh.
So
I would have to call they assessed my house.
Okay, but you know what? I think M&T Bank
M&T
Bank does reverse mortgages, Marge, but write it down, reverse mortgage, and take a look. It may be something to help you so that you can augment your income, okay?
Pardon me, honey? I can't hear you.
It's a reverse mortgage, and that'll help you. M&T Bank does them, okay?
Okay.
Thanks, sweetie pie. Anyway, yeah, I know. We were wondering about when the news was going to happen, and Marge was very kind of slow and deliberate in her delivery. But
I pulled it out. I figured it out.
Thank you. I didn't know where we were going. Anyway, I'm Esther Gulius, the tax lady from EG Tax. 8030930, 8030930, star 930 on a cell phone, and out of town 1-800-616-9230 is our phone number. And if we get a chance, we wanted to tell you about what to do getting ready for April the 15th, which is less than a month away. What to do if you owe money, because if you owe money, EG Tax can help you with that too. And if you just are wanting a second look, EG Tax will do that at no charge as well. We'll see you on the other side of the news. Okay, I don't know who that is. Whitesnake.
Cake.
Good. I like pie better. This is Esther Gulius from EG Tax, 8030930, 8030930, star 930 on the cell phone. And I will tell you, if you owe money, what to do. First of all, you should change your withholding. If you're in a position.
I thought you were going to say change your address.
That would help too. Change withholding. I mean, if you're in a pickle, you better change your withholding. Yep. Number two, or start paying estimates. We'd be quarterly payments where you voluntarily send it in advance. Number three, look at changing your lifestyle, because if that's what's causing you to not pay your taxes to the IRS, maybe you better do some budgeting. Or the other thing is you may be a candidate for an offer in compromises where you basically are unable to pay and maybe some catastrophe happened and you're able to make an offer to the IRS to get yourself out of the mess. And they many times will take pennies on the dollar. Or the last thing would be an installment agreement. They're really wonderful about that, don't you think?
Right. Yeah, they're
wonderful.
They're just going to ask you your income, your expenses, and basically they're going to take your debt, divide it by 60 months because they want to pay it over 5 years, and say, can you do this?
Right.
And you can say, no, but I can do this, and they'll even work with that, too. So
because the penalty and interest is accruing.
Yep.
Anyway, Mr. Gulius, the tax lady, here we go. We're going to go to Larry. Hey, Larry.
Yes, hi. Thanks for taking my call.
No problem. What can we help you with?
I have a question about, there's three different things. I have earned income through self-employment, and I have rental income.
Mm-hmm.
But I tend to take the rental income to subsidize my business to keep that going.
Mm-hmm.
So do I still have, is that a deduction, overall deduction?
No. See, everything stands on its own. The Schedule C stands on its own, and the bottom line is a profit or loss. And the Schedule E, which is the rental, stands alone, and that's a profit or loss. Any money that you take from whatever source that you have that's been after taxes, that you borrow to make the other business go, the expenses are deductible, and that's it. You cannot take a loan as an expense.
Okay. All right. Well, you answered my question. Thank you.
All right. Thanks, Larry. I'm Esther Gulius, the tax lady. Let's see. We got Pat. Hey, Pat. How you doing?
Good. I'm 75 years old, and we've been
the taxes
paying taxes. Now, we were told that we don't have to pay taxes anymore because we make under 23,000.
Mm-hmm.
And so now, all this time that I have been paying the New York State and federal, would we get a return on them?
Okay, so in the past, you've literally written checks out and you owed the federal government in New York State?
No, on our income tax.
Okay,
We filed,
all right, but have you been getting refunds?
yes.
So every dollar you put in, they've been sending you back, right, Pat?
I guess so.
Okay, so then you've gotten all your money back, and all you need to do is stop your withholding. And if your income is under that threshold, then you're talking about taxable income, then you don't have to file anymore.
Right.
If it's under 20.
Under 23,000.
Right, because if you have had withholding and the only reason you were filing was to get your money back, and you got your money back, you're whole. So just stop your withholding from now on, and then you don't have to file anymore.
Okay. Even, what about the rental? No, okay, that's it. Thank you.
All right. You said what about the rental? That's the problem. The rental may be a problem. And when you sell that rental property, then you'll have to pay taxes as well. So I just wanted to give you that. But to be real careful, Pat, because you're just talking to me over the phone over a couple seconds, why don't you call the office at 632-7886 or any of our offices and let them look at it to make sure you know what you're talking about, okay?
Okay, thank you.
Thank you, sweetie. Bye-bye. Because
that rental, the gross rent could trigger the tax return with the other income.
Right. So. That's exactly right. And also when she sells the house, when you sell a piece of rental property, you're basically writing off your basis every year, and it ends up to be taxable. And I wouldn't want her to think, oh, Esther said I never got a file. Every year stands on its own, and just because last year you didn't have to file a tax return, as long as everything stays the same, that will probably be true. But if anything changes, like you got extra income, you took out your RMD, you got to make sure you don't owe taxes. All right, we're going to go to Mark. Hi, Mark. How can we help you?
Hi. I have a question concerning Schedule A under the charitable deductions part.
Yeah.
Now, I've been using it for years for charitable donations and also for expenses involved with work for a 501c3 organization.
Okay.
So I'm familiar with it. But my question is, would my expenses, mostly mileage, for volunteering to help with a high school sports team, would that be deductible under there?
As long as you're a qualified
representative,
it's 14 cents a mile. And, yeah, absolutely.
Well, what do you mean by qualified representative?
Well, in other words, you're not some dad that says, boy, let's go out and help the kids. All right, and you're just out there on your own, and you're not really a representative. But if they say, "Oh, this is this person here," and let's see, it's
he's
Mark.
The manager.
This is Mark, and he's the manager, or is the assistant manager, or you're the treasurer, or you're a coach. Then you're named by the organization as somebody who's been delegated that responsibility. But just a parent showing up to help their kids, no.
Okay. I guess I'm not quite sure on that. I've actually been doing it for a number of years.
Well, again, do they recognize? But Mark, do they recognize you as?
I don't know if it's official.
Well, what do you do?
Excuse me?
What do you do for the sports teams?
Well, I go to the practices and help with instruction of the kids.
Are you classified as an assistant coach?
Probably not technically, no.
Well, see,
probably.
but what you need to do, this is what I do, Mark. I mean, they must know you because you're there all the time.
Oh, yeah.
I would go to the organization and say, do you consider me an authorized member of the coaching staff?
Okay.
Because in the event of an audit, you'd need that letter.
Right. Okay, so what I need would be some kind of a
right. I mean, this is time. This is a great time to have that conversation because everybody's talking to.
Are you in the school yearbook? Is when they take the team pictures?
No, because I'm never around when the pictures are taken. I have a regular job during the day.
Okay, well, but I just would have that conversation and say, I would really, I'm here all the time, and I'm wondering if you consider me an authorized, because maybe the school would not consider you authorized, but you certainly want to have that conversation.
Okay.
Okay?
Okay, the second part of it was, and it's along the same lines, if you go on a school trip as a chaperone, would that the expense of that be deductible?
You see, if you're a parent that just is coming because you're a sweetie pie and you're just a lovely man, no. But if you're an authorized representative and you are authorized by the school and that's your position and that's what they asked you to do, then it would be.
Okay.
Okay,
that answers the question.
All right, thanks, Mark. Bye-bye. Right?
Right. I mean, if his kids aren't in the school anymore and he's still going on chaperoning, I would say he's an authorized.
I would think so, too. But then, and not that I think Mark isn't a great guy, but sometimes people say, oh, my God, there's that guy again. I wish he would, you don't want to have that happen either.
Right.
So, all right, we're going to go to Tony and Clarence. Hey, Tony, how can we help you?
Yes, a friend of, first of all, Auntie Esther, a friend of mine is in a panic now because last year when he listened to your show and I advised him to apply for the Affordable Care Act, he gave a figure of his income and he lied. Basically, he told me this morning he lied to get a subsidy.
But that's all right. It all comes out in the wash, Tony, because when you do your tax return, then
not me.
No. When he does his tax return, he will end up paying a penalty.
Well, doesn't he have to pay back part of the subsidy?
That's the penalty.
Part of it. That's the penalty. Right.
Because he's lying. I mean, I couldn't believe my ears when the person. And this is not the first one. On another show, I heard another guy do the same thing.
Right.
What do these people think they're going to get away with?
Well, actually, believe it or not,
a lot.
Let me tell you something. For instance, I thought. In inequality, for instance, I thought that if somebody lied, then we'd be really penalizing them when we do their tax return. Do you know that if a person, like let's say somebody said that they were going to get they only getting $12,000 a year, so they got Medicaid. Do you know if the person really, when they file the return, had $50,000 a year, they don't have to pay back the Medicaid?
Yeah, I know that.
Okay, so there's a big loophole, isn't there? And let's say somebody had income, they put down that they had income of 25 and 3 dependents, then you go to do their tax return and they had income of 55 and 1 dependent. Do you know that they only pay back like $2,000?
Yeah, there's
right? There's a percentage. I mean, the truth is the liars are getting away with murder under Obamacare.
Esther, what are those forms that you said? I heard it, but I didn't understand it.
The 1095A is the Obamacare for, and I guess they're sending out 80,000 corrected ones, Tony.
What is a 1085, though? I couldn't hear.
A 1095A is the official health care subsidy and health care reporting form from the state of New York.
Oh, okay, but not from the federal government.
It says it's from the federal. I think it's
here in New York. It's from New York.
Right.
Right. Okay. Well, thank you. But there's going to be a lot of cheats caught eventually.
Oh, I don't think so. I don't think so, Tony. The law is set up to really. It's a sad thing, but it's set up to have you cheat.
Okay, well, thank you, Esther.
All right,
it's good to talk to you. I miss Tiffany, though. You should have had her.
She was here last week. She'll be here next week. Thanks, Tony. Bye-bye. And that's really the truth. With the Obamacare thing, the cheaters really got away with murder. Okay, we got John. Hey, John. Oh, we're gonna just blow by the break. Hi, John. This is Esther. How can we help you?
Yes. I filed my taxes earlier this year and forgot that I had changed jobs and I had a 401k that I rolled over. Mm-hmm. And when I filed my taxes, I didn't enter that information from the 1099. Uh-huh. Do I need to do an amendment?
I would.
Okay.
I mean, it's not going to cost you anything to do it, but but if you don't file if you don't show that you had a rollover next year, they'll be sending you a bill in the summer asking you why you didn't put it on your tax return. So if you want to avoid with our very short summers here, you want to avoid being upset in the summer when you were going to go swimming, I would do it now.
Okay.
Okay.
All right. Very good.
Thanks, Jen.
one thing going back to Tony from Clarence also is if people get hit with the penalty for paying back the subsidy this year, and that's why they owe money, the government's waiving that for this year also.
I know. It's
so
unbelievable.
These people who have lied,
they're making out
maybe
like
not
bandits.
intentionally, but there are some that do, but there are some that don't. They don't have to pay it back.
I know. It's unbelievable. I'm Esther Gullius, the tax lady from EG Tax, 8030930, 8030930. We're going to go to Bob. Hey, Bob, how can we help you?
Hi there. Putting in a few hours lately?
Yes, we are.
I'm a self-employed sole proprietor, 54 years old.
Okay.
My scheduled C net profit is $49,000.
Mm-hmm.
In December, I created a self-employed 401k account and
All right.
contributed $23,000.
Mm-hmm.
My understanding is that being self-employed, my employer deduction for the plan is limited, and there's a worksheet to compute that maximum deductible contribution. You with me so far?
Mm-hmm. Sure.
On the worksheet, it comes out to $32,000.
Mm-hmm.
So my question is, can I now make an additional contribution of $9,000?
Yes.
Great.
Yes.
Where do I report it on my return? Does
Under
it go
the
on Schedule C?
under the adjustment section, under the
under the SCP,
under the SEP portion, IRA 401k SEP portion, under the adjustment section of the 1040.
Okay, 1040 line 28. It does
Not the
go
Schedule
on
C. It does not reduce your self-employment tax.
Okay. I thought I read in the instructions that sole proprietors report contributions for common law employees on Schedule C.
No, but you're not okay. Okay, you make it as an adjustment on because you're the only employee, so you make it as an adjustment. You're not a common law employee. You're the sole proprietor.
Wonderful.
Okay.
One more thing.
Yes,
in
sir.
addition, my wife can contribute to our joint IRA account,
Yes.
subject to the limit for that
Right.
worksheet, right?
Right.
Wonderful. Thank you so much.
All right. Thanks, Bob. Okay, and let's see. We'll go to SJ. Hey, SJ, how can we help you?
Yes, Esther. I'm calling. I recently became, I guess, forced to become medically retired from a municipality job. I was a firefighter. I was hurt. I had a 401k. I have, now I have a pension, but I also have a portion of a disability payments. I also have what they call a structured settlement because I was.
All right. Well, the structured settlement's tax-free, right?
What?
The structured settlement's tax-free because it's for pain and suffering, correct?
Right.
Okay, so we don't have to worry about that. Your pension that you...
But don't I pay on that because I kind of fork that over, I break it down, and I put it into my 401k. I've done...
Okay, you shouldn't have. I mean, if you got a structured settlement from pain and suffering for a personal injury, that should not have gone into your 401k.
No, I do that because my financial advisor at the time, I said, can I do that? Can I add X amount of dollars still to that? He says, yeah. So I have been.
Okay, well, are you working?
No, but
you can't put money. I mean, we may be talking about two different things. You might be putting money into an annuity.
Maybe it's not. I'm calling it a 401k, but it's really not a 401k through my job. I started an
annuity
on the side.
An annuity. Okay, that's different.
Back when I was working. Myself. I was putting money into that too.
Okay, now do you have a question, SJ?
Yes, my question is, number one, how can I pay the tax on the portion of the Social Security disability? All
right, I'm going to give you a real quick thing because I want to get to some of the other callers. All right, you add all your taxable all your taxable pensions, all the taxable money that you had that came in. You add half of your Social Security to that figure and your interest and everything. Are you single or married?
I'm divorced.
All right. So you subtract $25,000 from that, and the excess over half of the excess over that was going to be taxable up to 85%.
Okay.
Okay?
Thank you, Esther.
Thank you, sir. Bye-bye. Thank you for his service, too.
Yep.
Okay, and we're going to go to Bill. Hey, Bill.
Hello.
How are you?
Very good, and yourself?
I can't complain. What can we help you with?
I just got a question regarding this 1095A, and if you receive a subsidy for getting health insurance through the marketplace, is that subsidy, reported to the IRS?
You betcha it is.
You got to do a Form 8962.
Okay.
And pull your hair out.
Yeah,
okay.
That's the reconciliation of the subsidy to see whether you got enough, not enough, or too much.
Right. If you didn't get enough, they give you a premium tax credit.
Okay.
And if you got too much, you start to pay back some of it.
Boy, it seems like it's French to us regular.
I know.
I think Latin.
Yeah. I mean, believe me, it's been a lot of fun.
I think probably what I'm going to do is call and set up a meeting with you folks because
it's a lot of fun, Mr.
Their
Bill.
wording is not.
Yeah,
English,
I know. It's in Sanskrit. That's why it's so interesting. But we'll be very happy to help you.
Okay.
Thank you, sir. Bye-bye. And we're going to go to Bob. Hey, Bob, how can we help you? Hello?
Yes, Esther?
Yeah, what can we help you with?
Hi, it's Bob W. I just called to pass on some compliments to the caliber of your work. I want to hear your listening audience hear that.
Oh, thank you.
You took a positively ugly letter from the IRS where they wanted a fortune and transformed it into a refund.
Well, thank you, Mr. Bob. I really appreciate that.
I just wanted the people to know.
Well, thank you, Bob. Appreciate it.
You're
Have a great
welcome.
day.
Thank you. Bye-bye.
Bye-bye. What a nice thing. And we're going to Natalie. Hey, Natalie, this is Esther. How can we help you?
Hi, Esther. How are you?
I'm great.
Good. I have a question for you guys. I am a nurse, and I will be switching jobs coming up pretty soon. And my new employer has, I guess, like a probation period before my health insurance will actually kick in.
Uh-huh.
And when I just had my taxes done recently, they said, next year they're looking to penalize you if you have greater than a 3-month gap, which this will technically be. So I guess my question is, do we have an understanding yet? Is that prorated, or will I get penalized? Is there any way to calculate what that penalty would be, or not really?
It's prorated based upon the months you don't have health insurance.
Okay.
So if it's only like 4 months, they'll hit you with the penalty for 4 months, not based upon the whole year.
Right, but the penalty does double next year.
It does.
Mm-hmm.
Okay. Yeah, because, I'm just starting out, and to be honest, when I priced out some of the stuff in the marketplace, it was really something I couldn't afford.
And I have to tell you, and the bronze plans are with their high deductible. It's almost ludicrous because you're paying X amount of dollars per month, plus you're still paying everything else. So I can see that as this thing unfolds, it's the silver plan and the gold and the platinum plan that's the best. But like Chris says, it's only going to be for the number of months that you don't have insurance. So.
Okay,
and it's basically, it's going to be 2% of your income divided by 12 multiplied by the number of months you don't have insurance.
Gotcha.
Okay.
So, so if you make $40,000, let's say, for example.
So then that's an $800 penalty divided by 12. So what is that?
70.
So there's 70 to 7 times 4. So it's like $300 if it's 4 months.
Gotcha.
Okay.
Okay. Thank you very much. I
You're
really
very welcome.
appreciate it.
Bye-bye, dear. Okay, and we're going to go to Bruce. Hey, Bruce, how can we help you?
Hi. My son moved from Poughkeepsie to Buffalo for work-related, and are those moving expenses deductible on New York State also, or just federal?
Absolutely. Federal and New York State.
And New York?
Yes, sir.
Okay.
All right.
Thank you.
Thank you, sir. Bye-bye. And then Helen, how can we help you?
Esther?
Yes, dear.
I have listened to you since you've been on with John Otto, and you get brighter every year. How do you do it?
I don't know. I think maybe, Helen, you're just I'm just thankful. That's all.
Well, her friend is Ponce de Leon.
It's something, I'll tell you.
Yeah, that's it. The old fountain of youth.
Question.
Yes, sir, ma'am.
My son was there this year, and he went under that Obamacare, whatever.
Yeah.
Now, he's been a juvenile diabetic, so he's been on insulin for many years.
Okay.
He went to get a refill on insulin, and you know what the bill is? $710. How in the God's name is a working person going to pay that?
I know. Is he? Must be on a. Is he on a bronze plan? What kind of plan is he on, Helen?
I don't know. He was so upset all weekend, and I says, "You better call," and he says, "I can't." So I just took the liberty.
Why don't you do this? Have him call our navigator,
Tim,
because if he's in the wrong plan, Tim can help him to get out of it, and because many times you find that the Obamacare people need some prodding to get it to go right. So have him call Tim at 4. You're in Niagara Falls, so he's in Lockport.
Yep, 438-2137.
And there's no charge, Helen. Okay.
214. No, I want to tell you another thing. What they said, the pharmacist said that they don't consider insulin, as a you have to have a medicine to cover that, co-payment for so long, and they don't consider this.
Well,
and
why don't you?
Know why you can't live without insulin?
I know. Have him call Tim. Okay.
Is he there all the time?
Yeah, I think he's there we're all there all the time.
Now he would be there today.
He's probably
he's
there right
till
now.
5.
Yeah.
Okay, honey.
Thank you.
And I
all right,
love
thanks,
your
Helen.
show.
I'm Esther Gullius, the tax lady from EG Tax. If you need your taxes done this week, I hope you give EG Tax some consideration. We certainly would love to help you. Our website is egtax.com. And until next week, I'm Esther Gullius with Christopher Fabian. Have a great week. Bye-bye.